This is Matthew Cratter from Trader University, and today I want to talk about the Bitcoin wall of money. I get a lot of questions, obviously, on my channel whenever Bitcoin falls. Oh no, Bitcoin just fell 5 or 10%. What do you think? Is it a buy, etc.? And what I always refer people to when they ask me this, I think this is one of the best investment principles that I've ever learned. This quote from Wayne Gretzky, which is about one way that he was so successful, according to him. You need to skate to where the puck is going, not to where it has been. So when Apple comes out with their iPhone, you try to look ahead and see how popular it's going to be, rather than focusing on what their current cash flows are, etc. And the unique situation we have here with Bitcoin is we know that there's a wall of money coming towards it, and yet people lose sight of this. This is almost as easy as money ever gets. It's almost as free as money ever gets. And I'm not just talking about the stimulus checks. There's a lot of anecdotal evidence, a lot of surveys that show that quite a few people, especially people on this channel, as I've seen in the comments, are going to take their stimulus checks and put as much of it as they can into Bitcoin. So this could be up to $40 billion going into Bitcoin and stocks, mostly a majority of it into Bitcoin. But that's not really the big money that I'm talking about. To give you an example, what if I told you that Warren Buffett was about to buy 10% of a stock over the next few months? Most people would try to get in ahead of him. And yet people aren't really thinking this way in terms of Bitcoin, and they're really missing out on a psychological trick that will allow them to invest at these very high prices, but knowing that prices are going much, much higher, not just based on the fundamentals and Plan B stock to flow model, which we've talked about extensively on this channel, but simply and in addition because of these investment flows. And I'm talking about the flow of capital from institutional investors, corporations, pensions, endowments, hedge funds as well, though hedge funds tend to be a little bit faster moving. These are big money, but they're also very slow moving money. Before they invest in something new, they have to have a committee, they have to have a lot of meetings, they have to get internal approvals and possibly even external regulatory approvals. But once that's all said and done, they come in with really, really big size. They allocate large amounts of capital, and then they have very long holding periods that can extend into the decades. And what we do know from surveys and from watching the news flow is that these big institutional investors are coming for Bitcoin. There's a recent Goldman Sachs article about Goldman Sachs, which I'll link to below, that talks about just the huge institutional demand for Bitcoin that they're seeing and how many of their customers are planning on buying Bitcoin or increasing their allocation to Bitcoin. And again, we're talking about large investors here. This isn't a retail investor survey. If you're finding this video helpful so far, I'd encourage you to hit that subscribe and hit that like button. Now, the real whale in the room is, of course, Michael Saylor, who runs the software company MicroStrategy. And it's very interesting to see what his journey looked like toward Bitcoin. He was shocked and horrified in March 2020 to see how many new U.S. dollars were being printed, and he began to think about currency devaluation and loss of purchasing power. He was sitting on $250 million in his company's treasury and decided to move all of that into Bitcoin. Now, even MicroStrategy and Michael Saylor, he has a lot of control at the company. He's a controlling shareholder, etc. He's the founder. He can really do what he wants with the company. But even in his situation, it took from March of 2020 until August of 2020, so about 5 months, to make his first investment into Bitcoin. That first investment was relatively small. He has since pyramided it and has invested billions of dollars more. But even someone like this, even someone who's sort of a local dictator at their company, took them 5 months to allocate. And so this is what we're seeing now. MicroStrategy was kind enough to put together an online event for corporations, for other corporations, big blue chip companies. and to teach them the Bitcoin playbook, how MicroStrategy invested, what are the accounting implications, what are the regulatory implications, basically a how-to playbook. And it's now available online for free, all these great videos as well talking about how they invested in Bitcoin. And everyone who sees MicroStrategy stock knows that this is something that adds a lot of value to shareholders and really increases the market cap of your company. And so there obviously this conference took place in February, beginning of February 2021. So add 6 months from that, and that takes us to about August, the end of the summer. And so if you were a CFO or a CEO who went to this event and decided, wow, this is really interesting, to get the ball moving, it's going to take months and months and months. And you probably won't be ready to start actually buying Bitcoin till the end of the summer. Bitcoin is probably already going to be about $100,000 by then, or even higher. So you can imagine what's going to happen when you get these very large, price-insensitive investors coming in who just need to allocate. They'll be dollar cost averaging every day. They won't really care that Bitcoin is up so much. They just want exposure to this asset class. And so this is the wall of money that's coming. It's not just corporations, it's also pensions, endowments, large institutional investors. And then, of course, we have the financial advisor group, especially in the US is where I know this group the best. And this is a group of people who've been telling their clients not to buy Bitcoin for the past 11 years, but they're about to flip and to tell their investors to start buying Bitcoin. You can see a number of articles online talking about how it's time to finally stop ignoring Bitcoin now that it's in the 50,000s. And the RIA Digital Assets Council is talking about this, etc. And so what will happen, especially when there is a Bitcoin ETF, there'll be a very easy way for these registered investment advisors, that's what RIA stands for, to get their customers into Bitcoin. And these will be like S&P 500 index investors, other passive investors. They'll just make an allocation. They won't care whether it's at 50,000 or 100,000 or 150,000 per Bitcoin. You can obviously buy a fractional Bitcoin. So we have large institutional investors. We have all this retirement money, all this RIA money that's about to be moving into Bitcoin as well, especially when an ETF is approved. And so we can see these giant investment flows on the horizon, just ready to buy any dip and also ready to buy Bitcoin as it breaks out. And then, of course, the ultimate buyer and where we're actually headed is the central banks buying Bitcoin. I've been talking about this for at least 12 or 14 months, and it sounded sort of crazy for a while, even to me. But now we see that there's in France, there's a lawmaker who is trying to get change the law so that France's central bank can start to buy Bitcoin. This is really unbelievable to see a major country like this, like France, doing this. And obviously this might take a while to happen. This could take a couple years. But ultimately, there's a game theory involved here where Bitcoin is rat poison for banks and central banks. But paradoxically, even though it sort of spells the end of the institution or really undermines its power, whichever central bank buys it first, eats the rat poison first, actually develops some immunity, because then they can benefit from price increases from other central banks piling in. And this is really the next stage after institutional investors is actual governments, whole countries, and their central banks buying Bitcoin. So we're talking literally trillions. This probably doesn't happen until the central banks probably don't start investing until Bitcoin is something like a $10 trillion asset like gold, for example, which is still fairly small for an asset. But at that point, Bitcoin would be about 10x higher. So it would be approximately $500,000 per Bitcoin, $500,000 per Bitcoin. So this is where we're headed. This is where the puck is going. And right now, Bitcoin has run up a lot. I'm very sad that I can't buy it anymore for under $10,000. But that being said, we know that the upside here is 10x, 20x, 50x. And we're still really, really early in this adoption curve. I love this tweet from Willy Woo talking about now how Bitcoin has roughly the same number of users as the internet had in 1997. We're at roughly the 2 or 3% adoption phase. And so there's just huge capital coming, huge flows of money, a wall of money, as people like to say. And the way what this means is that these final moves in Bitcoin are much larger. This is the way compounding always works. But it took this tweet from Alex Thorne. It took 8 years for Bitcoin to become a $100 billion asset. And then, this is from a couple days ago, Bitcoin's market cap grew by 100 billion in 3 days. This is how the compounding works. And we will have days definitely in the coming years. Right now, Bitcoin's at about $55,000 per Bitcoin. We will see days where Bitcoin will fall $55,000 in a single day. Maybe it will fall from 500,000 down to call it $445,000 per Bitcoin, something like that. And of course, you'll continue to see the articles about the death of Bitcoin, etc. But these falls are always from much higher levels. And this is why it's really important to focus less on the price and to focus on these fundamentals as well as these huge investment flows which are coming. And this is one reason that Bitcoin is a very safe investment, in my opinion. You obviously shouldn't allocate money to it that you can't afford to risk, but I think it's very safe simply because there is a floor on this market, and this floor is these huge investment flows that are slowly beginning to come, and that will really accelerate in the latter half of 2021 and early 2022 as well. And for this reason, I think the odds of a large bear market are very, very low, that this is actually going to be an extended bull market, much as we've seen in the S&P 500 for the past 11 years. There haven't been that many big pullbacks. We haven't had the pullback like we had in 2000 and 2002 when a lot of NASDAQ stocks fell 90%. And we haven't had a sort of 2008 pullback as well when the S&P fell about 50%. We have central bank policies propping up all the asset markets. And then on top of that, we have these huge adoption flows, new adopters coming in to Bitcoin. So really, I've never seen an investment like this that has this much upside with so little downside. And so that's why I think it's very important to skate to where the puck is going, not to where the puck has been in the past. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.